Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. On my last update, 12 or 13 days ago, I said that I was heading off to Switzerland and going to spend a few days in Berlin, and I'd be gone 12 days. Just got home last night, had a little bit of jet lag, but I wanted to do an update on Chinese stocks. So going back to March, I suggested that China was on the verge of a multi-year bull market, right when all the quote experts were saying how bad China was. We've got a bullish pattern. It's not a giant pattern, it's only a 4-month pattern, but we had our decline and then we have kind of a bottoming process going here on a short-term basis. And we have what's called an inverse head and shoulders pattern. Now we've had a pullback here, and I think it's time to buy this index. On Sunday, I put out a chart, just a chart, because I couldn't do a video on Alibaba suggesting a buy and a possible 55 to 60% advance on the breakout that we had as of the end of Friday, a week ago Friday. And so I wanted to first applaud myself, and second, I wanted to make sure that for the record, I was there before 19 other YouTube investment channels suggested buying China and Alibaba in the last 2 days after it went up 20%. So if you're listening to people like that, you're listening to the wrong people, because you certainly don't want to be buying. Anyway, let's get into this. So this is a long-term chart of the Shanghai index. And this is the big symmetrical triangle that's been going on for 15 years, gigantic pattern. And back in March, I suggested with this bearish engulfing pattern right off the support level that this was a very good place, that this was going to be most likely a low in the Shanghai index. And then we got a little bit of the uptick, and then we got a retracement in March. And that's when I put out my update saying I'd buy China here, and I'd put my stop down below the previous low, which was about 26.50, 26.85. So it sat there for a month or two, and then this month we're having a big uptick in the Shanghai index. So the thought here is that we could see a rally up to 42.50, up to resistance, and that this was a multi-year advance that was coming. And I still believe that. Now we're going to take a look at FXI, the China large cap growth ETF, and the fact that it doesn't look like this chart. So it makes it more difficult because they're not following each other step by step. Before we get into that, this was back in March when I came out with a buy rating, and all the sentiment was so bad on China. Who's in control? It's going on, China was in the dumpsters and everything was bad. Market sentiment is something that I look at very closely. When everybody's overly bearish on something, I tend to take a closer look at it and I want to get involved in it. When everybody's overly bullish, like let's say NVIDIA a couple months ago, I tend to be skeptical of that. So just to give you an example, magazine covers are really good at forecasting or giving you an idea of what the overall market sentiment and extremes are. And usually I take the other side of that. So now let's look at FXI. This is the iShares China large cap ETF. So here's our bearish channel. Prices were able to break out of that and then came down and tested in March. That's when I went bullish on the FXI, the iShares large cap growth ETF. You can look at my videos on that particular video that I put out to see what I said back then. But here's our bearish channel. This made me take a close look. We had a 5-wave up advance on an Elliott wave. Theory believes that trends of cycles go in waves of 5. So when I saw this, I thought, oh, this trend could be reversing. And then I watched and watched and watched and waited. And you can see now this is a inverse head and shoulders bullish pattern that I was watching and suggesting on my weekly calls, that we were possibly forming a right shoulder here, and with a breakout over 30. We measure from the bottom of the head to the neckline. We project that distance upward, and we come up with 39 for a reward of 6 to 1. We got a huge up last week, up 18.5%. So it all follows script. And what I want to point out here is I was actually selling on Friday. Why? Because look at this epic volume bar. So all those YouTubers, those 19 stations that I referenced, they were suggesting, and they were out there buying stuff way up here. And when you get climactic volume like this, it could mean a possible top, short-term top. So whatever my holding is in FXI, I might sell 5%. I might sell 10% on something that's up 18% in 1 week, because it's a euphoric kind of thing. And this volume bar is confirming that. We're also starting to get overbought. So yeah, I'm bullish on FXI. I think it will advance nicely, but it won't go in a straight line. Every time we get an up day, I'm going to be selling a little bit, just touching it, selling a few shares. Whenever we get a pullback, I'm going to be buying double the amount that I sold. So that's how I do things. The point and figure chart, we now have we had only a bearish trend line here saying that the trend was down, and now we have a bullish trend line, this blue upward sloping trend line. And we have a new buy on FXI with a breakout over 29 into 30. And based on the width of this pattern, we can project up to a $46 price projection. I don't put that in stone, but this is saying 46. My pattern, my chart that I showed you just before this was showing 39, and I used it to help. But I expect China to do very well for some time. Alibaba, this was the chart I showed on Sunday. This is a two near symmetrical triangle. And here's where we closed last Friday, a week ago Friday. And that gave me the buy rating that this was intact, this bullish pattern. Price projection 150, which is 66% above where it closed that day. And so you can see this week we got 21% upside in Baba. Again, I was selling some on Friday. I like to sell into strength, and I like to buy on weakness, and it increases the percentage that you possibly can make on the upside. So again, bullish on Baba. I think it's got a ways to go. And here is the point and figure chart. We have a new bullish trend line here, but look at this column of X's. This means that there's been no back and forth filling and advancing. It was just straight up. Anything that is 10 X's in a row is what it's termed a pull, and it means it's overbought. So when I look at something like this, I'm like, yeah, I'm going to sell some. And I certainly will do that, hoping that it'll be down Monday and Tuesday or so I can add to my position. This is just a daily chart. I wanted to show this because, number one, we're severely overbought. It doesn't mean it can't go higher, but most likely that rubber band is getting stretched really far. It can't go as far as it could have before. And you can also see the volume bars. So these are really extreme, a lot higher than they've been over the last 6-7 months. So thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Again, I also have intraday updates, which can give you a jump jump started on a new position or selling something ahead of time, I will be doing an update on all my open positions, probably tonight or tomorrow. Thank you. Have a great weekend and good trading to you next week.